Welcome everyone to yet another episode of Disruption Talks. It's been quite some time since I've been here because we've been having other hosts, and that's a great piece of news. But luckily, my holidays are over and I'm back to running the show. So, even though you'd think that summertime might be a slow season for investors for some reason, apparently it's not for Insurtech and not for parametric insurance. You might have heard our recent disruption talks about internet outages, about cloud issues, and apparently there are people in Zurich, like our guest René, who are trying to solve this problem and close $1 billion gap that no one takes care of. Hi, René.
Hi, Philip.
Great to have you here. Great to have you here. You're in Zurich. Are you there right now? I miss that city.
So actually, I'm based in Austria. So our team is split over multiple countries.
Okay. So just going back and forth, are you?
Exactly.
Okay. So from what I gathered from the articles that I read, I'm gonna give an intro to our audience, but then I'm gonna need you to give us an intro about yourself. So Riskwolf is a Zurich-based or Zurich and Austria-based insurtech startup that develops a platform capable of detecting internet outages and modeling the insurance risks around them. So given what we've seen just recently with AWS and the other name that I don't recall right now, it seems like perfect timing for you guys. From what I read, you got funding just at the beginning of June, almost $1 million Swiss francs.
Exactly.
So major congrats on that. But before we jump into Riskwolf itself, let's dive into your story. So what's the personal background and how do you end up founding Riskwolf?
Yeah, so what I've been doing mainly like the last decade or so, developing and architecting data-intensive application. So everything that has to do with large-scale data processing. I have also like a consulting background, so I was doing that in Germany, Switzerland, and also in Austria, so in multiple industries. And nearly half of the time now I spent then in the reinsurance vertical, so on a large project in Zurich. We also met then my co-founder, Thomas, so a couple of years back. And yeah, this is basically a little bit a short background on my end.
Okay. So tell me more about your co-founder and founding Riskwolf. What's the story behind Riskwolf itself?
Yeah, so what I mentioned, so I was never thinking of ending up in the insurance vertical, first of all. So when I did my university, after the university, said I don't want to do banking, I also don't want to do insurance. But somehow I stumbled into it, the whole game. But I was a little bit, the first touch point when I went into the insurance was on this project in the large scale project in Zurich, like a couple of years back. And there's the main objectivity was really redesigning the backend system of this reinsurance company. So there had a lot of new data coming in, modeling of risks and so on. And back then also met Thomas. And with Thomas, a couple of years back, we already had like always coffee chats in between around how data is reshaping the industry. Like what can you do really with data? And how can you build up everything more event-based? Meaning if something happens from the outside, how can you take this kind of information in, run some risk models, and then basically process that, and also provide insurance context and insurance information to this. And then in addition on the project, also on the other end, everybody I think it was experienced this like this incidents. Sometimes something stopped working, and then you see this effect chain. You have then really departments calling each other, and then everybody's really getting a little bit nervous about these incidents. And with the recent cloud push, mainly also most of these things you cannot really control anymore. And therefore we said, like, I would say mid of 2019, we also did first POCs with our partner company in Bratislava, more on the technical end, what can we do here? And this was a little bit our founding stone where we said, okay, let's do it with a new model, meaning take the parametric insurance model and apply that to new risks. And our vision was basically to build up a platform in the background that is really capable for processing like millions and billions of data points, and then also linking them to insurance policies to fully automate them, this kind of risk processing for this kind of new emerging risk, where obviously currently there's not a lot of offerings in the markets in terms of protection.
Okay, and one thing that I need to hear from you, I want to learn from this hour that we're going to talk through as well, as so should the audience, parametric insurance. Can you explain, like I5, what does it mean? And not even just for tech, but you can speak in terms of a general concept, because I'm pretty sure that this can apply to physical events as well somehow.
Exactly. I think it makes sense to start with that, and also with an example that everybody knows. So we can take one of the recent examples, for instance, the floodings in Germany. Like you have typically a normal insurance processes. You have these floods, something is really badly happened in that sense. And the normal insurance process is you have like an insurance, for instance, if your house is getting destroyed or your cellar is getting destroyed, then normally like there's somebody's coming to your cellar, doing some investigations, then you need to file a claim. And after the claim, after some months, this claim is then settled, and then you're getting a payout. So it's like quite a lengthy process, like a lot of steps are involved, a lot of people are involved. And if you just apply it, for instance, for this given use case around the floodings, when you apply it to a parametric model, you have a kind of a scenario where you say, if this happens, then that. And in this scenario, you would say, if like the rain volume over a given day is more than X liters or something like that, then basically you get automatically a payout, because in the background you could calculate, however, if there's really heavy rain over during day, that all the cellars will fill up. So there's a high likelihood basically that there is a kind of damage already. And so it means the parametric insurance with the model, you can automatically process these risks, because you agree in your contract on not on the damage, you agree basically on certain parameters in that sense, for instance, rain volume, but you can also apply it to other risks. For instance, it's widely applied. It's, for instance, in the crop insurance. For instance, in India, there are large policies if there is no rain or too much rain or wind and so on. So it's really, I think, a well-known model in weather. So everything weather related. There you have a lot of things going on. You have this also for the natural disasters. For instance, earthquakes. There you also say there are also policies out, large policies to say, okay, you're getting a payout if there is an earthquake above a certain scale without any damage assessment. So this model is already quite, I would say, at the moment quite niche, but applied in the weather sector. And we're taking this model now basically and apply it to new emerging risks for the digital economy, basically.
Yeah, I'm thinking if that's just a fair sharing of the risk between the insurer and the insured, or is it just better for the customer, or is there a benefit for the company as well for applying something like that?
I mean, I think there are benefits on both ends. So definitely on the customer side, because it's really transparent. So there is not normally, I think everybody knows it. If you have a claim with an insurance company, sometimes it's not that straightforward to get a payout. So it's normally say, you get something, but quite often it's not the amount that you would expect. So normally you get less, and sometimes you even get nothing. So it's even like this discussion process between the insurer and the insured. Basically you save that, because in the contract it's transparent, it's totally agreed what is the payout, and this need to be fulfilled. That's on the one side, it's definitely a benefit towards the insured. So it's like full transparency. And the insurer has the benefit because in terms of cost saving, you can really automate these risks, meaning you can really run that on an IT platform without a lot of human interventions. You need to have like a sensors, you need to have data sources that basically are robust, resilient, and based on this information, you can run the full process fully automated in the background.
So essentially replacing a binary black and white logic of yes or no with a if this then logic that's more complex than just one.
If you boil it down to like a programmer standard point of view, it's exactly that. It's like you have a kind of a contract. You can also call it like a kind of a contract that basically does exactly that. If this happens, then that. So, and there also are some applications, for instance, some other Insurtechs applying similar models. Also, for instance, running it with smart contracts on the blockchain and so on. So that's.
Okay. So parametric for me means more human and more down to earth and more realistic insurance, I suppose.
Yes. And the third advantage of the whole thing is normally it's also easier to sell, especially for new risks. Is you can always, when you basically present this online, everybody understands it easily. In our case, it's downtime, so meaning 1 hour downtime, I'm getting X euros, for instance. to $5,000 for 1 hour downtime. So it's quite easy to explain, and you can also then really package it nicely. So you have a small package, a medium package, a large package that normally corresponds then to your losses. And this, of course, the parametric model can also be combined with other more indemnity-based insurance components. But also the main advantage is definitely if you're fully automated, you can directly give a fast payout to the insured as well, meaning you can really cover like the minimum losses, and then having, for instance, afterwards a kind of a settlement process as well. For instance, in the weather-related risk is applied exactly like that you get a fast cash relief, so that somebody can quite quickly get some cash on his bank account to do something with that, and then also only after some months, basically, the full settlement process is happening. Yeah.
So essentially, you serve insurers. I'm an insurer. I go on your platform and I can create my own parametric insurance product, a model, a policy for customers, right?
Exactly. So what we are currently targeting with the platform, so we have two distinct user groups. One is more the insurers, reinsurers. So currently we're more focusing on the reinsurer side, because we have seen the risk appetite is higher to really define coverages for new risks. And what they can do on the Riskwolf platform is they can go there. Look, we provide the models around downtime incidents, also other risks. So we're also now looking, also really broadening this up, and they can really then run this through. So they really can calculate the risk rates, what is the impact, and then they can say, okay, I'm interested offering a coverage for like a waiting time for 2 hours more, 4 hours, 6 hours, and so on. And based on that one, with our simulation models, basically we can provide a kind of a technical risk price to that. And then what they can do within a click of a button, they can bring this to the platform, meaning this becomes then live, and they say, okay, I'm offering this coverage for 3 hours downtimes for XYZ for a given price. And then on the other side, basically you have a couple of APIs where you can then start binding, meaning you can then really just have then digital platforms basically using these APIs for getting coverage. And what we're also looking at, basically not only protecting the platforms, but also their partners. Meaning there is also not only like a self-protection for the platform, but normally like the partner networks, like the thousands or millions of gig workers and so on that are normally, or merchants that are behind of that, they're all having the same risk. And the platforms are basically can then also become a kind of distributor towards their merchants. And for us, it's quite easy because we just more kind of, I would say, like the backend guys, like the backend providers for this platform. So we run the risk and basically give them different signals to different parties if something happens then.
So that's what I'm curious about, this relationship that you mentioned. So it's not just about the immediate insured, but also the connections to that person, to that institution, to that organization. Just like we had that, it was called the Akamai outage, right? Approximately lasted 1 hour. But it's one thing if I am just a store on my own and within that hour I wasn't able to make sales or do anything else. But if I myself am a platform and other businesses rely on me, then all of a sudden there's a lot of orbiting ripple effects of things that if I wasn't able to provide my service, then I'm getting a multiplier of lost revenue times the number of clients times their average revenue within an hour. So what to insure essentially? Are we lost revenues, productivity impact? How is that calibrated really?
Exactly. So there's also, when we look just at, broadly speaking, at the outage topic, there we have different types of what can happen. Or so it's like one thing you already mentioned, normally like the obvious example is like you have an e-commerce trading site, and this e-commerce site cannot sell for like this 1 hour that you now mentioned. So it's mainly like based on historical sales figures, you can then just calculate what is basically a kind of a loss for this 1 hour that you could put in a contract and then compensate for this revenue losses. This is one example. Then, but on the other side, there are also some other topics that are interesting. For instance, when you now think about work at home, like all these productivity losses, you'll have corporates, everybody sitting at home, and then also you could have large-scale problems, especially we're looking into Southeast Asia, where then, for instance, a full region doesn't basically goes offline. So meaning you have plenty of people just sitting at home, they cannot work. And there, of course, it's more about their salary. So you also have like whatever 20 people sitting there times the salary, times the daily salary is basically something that is then also a kind of a compensation that can be put into the contract. And then, of course, the other variants of that, for instance, additional work. Normally, like if you have these incidents, like spinning up this emergency response teams, I think that like this site reliability engineers and so on. So it's like everybody that is need to be then on call. Like also this kind of additional costs can also be basically part of such a coverage as well. And on what we basically give the insurers the possibility to design like this kind of coverage, saying, okay, should it be more kind of a direct compensation for this revenue losses, or is it more about additional work and so on? So that's a little bit more this flexibility. And the nice thing is it's parametric, meaning it's a couple of data points. And what we are doing is a little bit slicing and dicing this kind of risk and just cut it down into insurance. In what's insurance proposition in that sense that you can bring into the market. Meaning we are really here on the way for building up a new line of business, besides this obvious cyber topic, also for this incident outages, downtimes, like this, like daily things that are just happening.
And also, when you said slicing and dicing the risk, essentially for me, if I'm an insurer, this works in my favor, because instead of letting the losses just mount on, I can just set up a trigger-based event, right? And upon reaching that threshold, the payout can happen. I'm not putting myself liable to a situation where the outage just goes on and on and on, and then I have to pay some crazy amounts.
I mean, this is also on that one is you can always limit that. So you say, okay, 2 hours up to 24, and then afterwards you, for instance, have another policy kicking in, like a kind of add-on coverage. Or you can also think about additional ways of transferring the risk, meaning it's like in the topic like ILS, more towards the capital markets, where, for instance, say, okay, if I have like a full, like one scenario everybody's afraid of is like if all 4 cloud operators stop working because of like a kind of an accumulation problem. And also here with the parametric approach, you can also then find solutions to this kind of more, I would say, bigger issues that can happen. So more on the long tail side. But we are more focusing on the short term, meaning this kind of 1 hour, 2 hours, 5 hours issues that just could happen. And normally they're getting repaired quite quickly.
So you mentioned that there are two groups on the platform. I want to talk about those key customers, but in terms of the timeline, so the now and the future, because right now, if I'm getting this right, the focus is on reinsurers, helping them understanding and pricing the risk, introducing them to this concept, because just like you said, it's niche, right? I imagine your clients just digital platforms, internet providers, telecommunication companies. That's where outage means real problem if I cannot use the product in real time. Can call someone, can get on the internet. I really don't like a moment like that, right? But what about the future? Are there going to be more opportunities in the same spaces, or is it just going to also broaden?
So the idea what we're currently facing when we have a typical a platform problem, a kind of a chicken egg problem. So meaning also if you want to sell coverage, you need to have like somebody who is really backing it up. Meaning also last year and also currently we were heavily focusing on building up relationships towards like the reinsurers, who really mainly then can give us this kind of underwriting capabilities, because on the Riskwolf platform we are not directly underwriting, so we're really more the information provider. So meaning the underwriting need to happen from the reinsurer. So meaning we're currently onboarding also one large reinsurer, so we will also announce that now in August. And with this reinsurer, we basically get then the capability to really also focus on the other angle, meaning with this reinsurer, we can use then this capacity for focusing on the second party of our platform model is mainly the digital platforms, and also here, then definitely carving out different product propositions, and then also approaching these platforms with our API model, meaning that we say, okay, we are basically their counterparty, so they're plugging into the Riskwolf platform, and we are basically handling and also taking care about the complexity of the insurance. So we are a little bit as being a kind of a shield towards the, I would say, the insurance-specific terms and also the processing, and we just want to make it easy, fast, simple, and reliable for any of these digital platforms to say just plug into a Riskwolf, get what we can offer from in terms of coverage, either use this as self-protection or also, for instance, bring this out as a guarantee to your merchants or food delivery drivers and so on, or even become like a distribution partner. But more of the distribution, we see this more as a long-term game. So definitely that we really can now building up these relationships with the platforms, and from there on using their channels basically to the digital economy.
So that sounded like a 2021 future answer. What about 2022? And congrats on the partnership that you just mentioned. Looking forward to hearing about who it is in August. But let's go a little further in this time machine. What's going to be so crazy that we don't even know about it yet in 2022? What's your prediction?
I mean, what we really want to become really good at is carving out this kind of protection gaps for the digital economy. We just look there and there's so many different things that are not yet, there's no coverage. And currently we started with the connectivity topic, I would say. So we also have there just two flavors. So one more on the cloud, one more on large scale, like regional outages. And going forward, currently first focus is like Southeast Asia. So this is the first entry market. And then we want to grow into two dimensions. One is, of course, geographically, really penetrating roughly 20 countries in Southeast Asia, and then also grow like globally, really also looking at like the Europe, for instance, also more on the cloud end. And then in addition, this is also interesting, adding additional risks to the platform. So not stop with the connectivity, but for instance, we're also now starting early discussions around prices, for instance. One topic is, for instance, food prices. When you think about the big platforms, everybody like in Southeast Asia have all the scooter drivers, and they have different risk exposed, and one of the main cost driving factors of them is the food price volatility. And also here we can do a kind of a parametric coverage. It would then just, with a really tiny premium of like 50 cents or so, you could cover like a food delivery driver who, for instance, uses one of the big platforms there and just basically wants to protect themselves in case of full price shocks. They can also get like with a tiny amount, like a kind of a protection. And then also with this one, combining it with additional things, for instance, with CO2 offsetting and so on. So I think we have a nice backlog, but currently we're really now focusing on the connectivity in Southeast Asia, getting basically the first contract up and running with one of the larger platforms together with the one reinsurer. That's the current focus point, but going forward, I think we have plenty of growth potentials in different areas.
Okay, so back to 2021 and actually 27th of July today. So it's been 2 months since the announcement of that funding round. What's next in line? What's like the immediate need at a pre-seed/seed kind of stage investment? How are you planning to allocate that?
Yeah, so we're currently doing two things, and one is more the platform investment. So we're really now building up like the end-to-end processing capabilities, and also like mainly on the end user, meaning really focusing on the underwriters of the reinsurer to really make this seamless, that they really like going to Riskwolf platform, creating new coverages, and really getting into this kind of a work mode with the reinsurer to really get into this kind of working relationship to really carve out these product cases. And then, of course, currently we also we now onboarded our team. So we are now expanding into Singapore. We got like our Ashish, our Asia market lead, who is really connecting them to the platforms. We also have them in Delhi with Style. We also have now somebody who's really experienced in parametric modeling, like more on the actuarial side. And then also we also have a quantitative modeler like Daniel in Germany, who is experienced on exactly more on carving out all these different models on this kind of mass data that we're now using. So it's really building up the team, building up the relationship with our first customers, and really now getting us ready basically to get into one of the first contracts.
Okay, one of the first contracts. Interesting to see that soon. But I'm still talking about Riskwolf. Just my last two questions are: what's the customer feedback so far that you heard? Something that we wanted this to be here a long time ago, or is this a response that's at the right time in the right place, but before it maybe would not have been such a success as if is right now, given the conditions and the circumstances that we're facing?
I think currently when we look at Riskwolf, we're feeling a little bit the hole that was there. Like you had the insurers and you had the digital platforms, and we are now really becoming the glue in between. And what we already see is that, especially on the one reinsurer, really like the approach, that we basically also quite fast in that sense, that you say, okay, you go to the Riskwolf platform, you set up something, you can simulate this through, you get your like a kind of a past experience, and then also really go into more this customer-centristic way of doing things. So you can really reach out then from the reinsurance side directly to the digital platforms to basically penetrate the market more directly, I would say. So this is, I think, one model to really like, to really have being a little bit more the extended arm for a reinsurer towards the digital platforms. And also there we are already bringing in additional cases. And I think also once mentioned, also definitely becoming more kind of a preferred partner for parametric insurance, more on the property side, especially for the digital platforms, for the consumption ecosystem in Southeast Asia.
So what I'm also thinking about after hearing about this customer feedback is you say you're the glue. So what will help the glue grow? And what are the things that you're afraid of as the glue? Other glue makers, perhaps less need for glue. What are the positive trends that work in favor of Riskwolf success? And what are the things that you're looking at and saying, I need to insure myself against that somehow?
Yeah, I mean, there's one is definitely the overall trend. It's definitely playing on our hands. So meaning the digital economy is just growing. Like also, I think in Southeast Asia, even 1/3 in addition to now. And like everybody's now using this digital media. So like from like an individual point of view, the patterns not changing more. We're not going back to like the old patterns. So it's really, especially in Southeast Asia, it's, I think the digital way of doing things is now becoming the new normal. So I think this is definitely like this trend is just accelerating, and I think we're currently at the tipping point, especially in Southeast Asia. This becomes like the established model. And on the other side, what I mentioned before, there's not a lot of protection, meaning there's a big market in the background that is not yet covered. And what we also see, and I would even put this on the positive side, is what is now going on the Insurtech side, for instance, like a lot of companies, for instance, also more also approaching these risks. So it's like there are really now people now moving into this direction, because once we started first in like 2020, people just said, also especially insurers, they said, is this even a problem? Does anybody have this incidents, or isn't this the internet made for surviving a nuclear attack? So it was a little bit, it's a kind of awareness topic. But I think now it's basically, I think the train is just now going into one direction. There you cannot stop it anymore. Yeah? And also like the other things, like also the enterprises, everybody's now moving to the cloud. So this is, I think there's so many different ways of doing things. That's, yeah, I think it's crazy.
So also what I'm thinking is if you rely on insurers onboarding the platform, there's a reason why there are insurers and neo-insurers, right? So they typically take their time before jumping on some sort of innovative decision or deciding to go on a new platform. They need 27,000 approvals to make such a decision or a consideration. I'm thinking out loud, is there any room for collaboration with neo-insurers? Because to my understanding, sometimes like we have Metro Mile, but they're for cars, right? So there's Lemonade or there's WeFox, but they perhaps might not be in the outage business. So that's what I'm curious to consider, if it's just the insurers that we know, or if some neo-insurance companies will also be able to manage that risk somehow.
I mean, it's definitely was that collaborating. So insurers that definitely now start opening up, also really looking into partnerships. And I think going forward, this would be the right way. So we're not competing against insurers. We really want to onboard them. We want to collaborate with them. and definitely making it also for them just cheaper for going into this risk, so they don't need to build up their own platform, they just can use us. So it's also a little bit an investment decision.
Okay, so all of you insurers out here, if you're listening, make the smart choice. So now, enough about Riskwolf, if I may say so, and I want to hear from you as an industry expert. I need you to put that hat on and tell me, what's your take on this quote? To compete or collaborate? Traditional insurers are going to be working with Insurtech startups, or they will be looking from behind. First, they're going to be scared. Then they're going to say in the boardrooms, you know what, guys, either we're going to acquire this or we're going to copy this internally because this is actually cool and it works. Which way is this going to be more partnership approach or more just predatory approach? Because this is business.
Yeah, I think this is a good question. Also, I think it depends a bit also on the area. So there's also between, for instance, reinsurer and insurer, there's always like these lines are a little bit blurring, I would say. So as I mentioned before, reinsurers now want to go more direct to the customer, and also insurers, they are now trying a little bit to bypass the reinsurers, going directly, for instance, to the financial markets for getting reinsurance capital. So there's also like this alternative risk transfer. So I think there's the overall industry is a little bit in movement. And what I also see is a little bit from our standpoint, also kind of here is like when you build up this kind of ecosystem, or you just need to find the right partners, and also especially for the insurance business, you cannot do it alone. So it's meaning also here, I think even the big reinsurers, then they need to basically build up the right partner network, but also the insurers. Like everybody, I think, has more benefits if they're trying to find out the right partner networks. But I think the constellation could be different. So it could be that you don't have anymore this kind of classical insurance value chain where you have like a broker, an insurer, and then a reinsurer, and so on. So there could be different. I think it's just a little bit the boundaries are a little bit not changing, and also who is going to cooperate with which constellations. This will definitely change, and then also based on this one, other competition patterns will emerge. So I think that's a little bit what I see is a little bit the whole thing is now changing a lot, and I think this was a really exciting times to be just one piece of the puzzle in the overall game here.
It's going to be interesting to see because at least my perspective of the most recent patterns of reaction of the incumbents, even just what you see with Bitcoin, and I know everybody's just tired of that, but it's the perfect example of all the large companies first releasing media and press and top people, executives dismissing it. You can actually find a website telling you how many times Bitcoin was declared as dead, and it's a high number. And then you see Jamie Dimon going on Bitcoin, or you see Goldman Sachs developing their own department, or you see Visa having that implemented, or PayPal having that as a method of payment, as a native method of payment. So my take, and let's see in a couple of years, maybe we can comment on this same interview to see how the current insurers have actually decided to play this. I'm also curious about starting Riskwolf in a time like now. So like the COVID implications and the post-COVID implications, both for what you're dealing with right now. So just as a company, do you believe in a hybrid model? How's that remote wise? But also at the very beginning. So, you know, when you had to probably raise funding without meeting the investors face to face. So quite a wild ride, very adaptive. I'd like to hear more about that.
Yeah, definitely. I mean, also here, when we started Riskwolf, also we had the discussion also 2019 with the company in Bratislava. I was sitting in Vienna, Thomas in Zurich. We also said from the beginning, we just want to build up the company like with a kind of a remote first approach, meaning that everybody is a little bit working from home. And then we did these hackathons. Mainly we were meeting like every 6 to 8 weeks in different locations, just bringing together the full team. And what we have seen is, I think we did last week we did I was even in Bratislava also with the other guys. So we did again one of the physical meetings. So it's like the number 13 or so we did. And what we strongly believe is a kind of a hybrid model, but not in a sense that you have offices and people sitting at home, but more in a sequential point, meaning you have like people working everybody remotely, and then you bring it together to an intense phase for 2-3 days or so. So basically everybody splits up again, and then everybody works at home. Because especially it's getting quite difficult if you just a few people basically joining remotely, and then you have like 3 of people sitting in a meeting room. So we don't believe that this model is going to work out. Either you go really have office days or so that you can really establish that everybody comes in, but having then just 1 or 2 people joining then from phone and half of the people are sitting in one meeting room, I think this is quite hard. And I think either you have really good equipment, but currently I think it's not working out. So we stick to our approach. So we definitely being remote first. Everybody works at home, so we also have now a little bit established our habits, I would say, around that. And so that's a little bit also the one. I think for us, I think it was a good experience. Also, we did like this remote onboarding of the 3 new people, so we also have not met in person currently. I think that's, and also like the investor discussions again, it was also, I think it helped us a bit that we already were a little bit trained in using these means.
I mean, definitely, especially in our field of IT, and I've been having a lot of discussions either on those live streams or in person concerning remote work, and I like your idea because it takes it a step further. Because the discussions that I've been hearing is, do we do remote or do we do it at the office? And the response that was like the level up response was, you give choice, you don't decide it for the other person. But for me, what you're saying is a level up. And of course, that's dependent on the size of the company and the needs for such meetings. But essentially, I think that for me, it would be a little bit like collaborating at an academic university level, where sometimes we just split to our own task, which is the remote part. And then when we meet for a specific agenda, and we actually do like a sprint, and the sequentiality of it all. I think that for a person like me, that would work great. So I'm really digging this idea. So unless you have anything else to tell me about post-COVID implications, we have 2 general questions that we always ask our audience. But if you do, I'm all ears about post-COVID implications.
I mean, for that, just can mention what we also have seen, because I was like last year, 2020, I spent like a couple of months in Asia, so before COVID. Also like really traveling around, finding about the problem and so on, also meeting insurers. Also quite interesting experience when you, for instance, I was in Vietnam and also talking to one of the largest insurance companies, and those people, they were not prepared for, I would say, working online. Like everybody was in the office, nobody used videos and so on. But it was quite interesting to see then also how quickly they adapted. So meaning, I would say even like an old school insurer in that sense, they were quite fast, really bringing up all these new things, and then we just moved online. For me, at the beginning, we said, okay, this will never work out. So we just said, okay, this lead we can take off, and we can come back in 2 years again. But what we have seen also, the adoption also, especially how even like traditional players can really move into this space. It was quite interesting. I think it's more challenging, I think, for the people, but I think it's definitely working. So we have seen that also from a personal experience as well. So and now it's a little bit an established relationship as well. And that's also the advantage now. We can now reach out from home into multiple markets. So we have discussions I think in all Asian countries ongoing, either directly or with partners. So reaching out as really extending your global reach, if this is definitely, I think, quite interesting. That is now a little bit possible with this post-COVID implications now. That everybody's now open to do that. Like pre-COVID, it's like come to us, to the office, do a business trip and so on. But now I think, especially for the early discussions, everybody's open to do this over video and so on. So there's no resistance anymore.
Even cultural differences aside, it is the case that back then us humans like to play around with the concept of showing more respect, showing more grace by actually showing up and, shaking the physical hand, whilst right now the past year has made us brutally practical with regards to that, and sort of, ripped off the mask of, hey, actually, no, you're not that, you can take it easy. Just jump on a call.
Exactly.
We have a question in the comments. It comes from Tomasz, and it goes as this. As a chief technological officer at an Insurtech startup, do you believe that the insurance boardroom would be forced to change their traditional perception that CIOs or IT is more of a back office role than a driver of the business? Does the industry need that shift?
I think that's a really interesting question. Also the perception of the IT department in the insurance companies. That's a little bit special, I would say. So I worked a lot with the IT departments, and this is exactly the current perception is like the IT in an insurance company is a little bit the background processing, and normally you don't see them. So you only see them if something happens, and then everybody gets angry. And what I try, at least at Riskwolf, to a little bit cover this kind of a bridge towards the market, also to having more a kind of a product focus point of view, and also really to make sure that the business architecture really fits into the IT architecture. And I would also say at Riskwolf we are definitely tech driven. So we really try to bring in like the actuarial processes, the business processes into an IT framework. So that's definitely something that we want to drive for. So like with this DevOps methodologies, we're really also doing automatic deployment on all these things. And I think the role is definitely has to change. And I'm not sure if this is only then like a CTO, but I think really having this possibility to go more front facing, or to really see where can you really generate value, or especially also generate value with new products. And it's not only the ITs, you need to integrate and somehow the overall analytical view, and then you're already ending up more in the core functions of the insurance companies, meaning all this modeling, actuarials, things, and so on. So that's, I think currently it's a little bit of, I think definitely, I think it will change, has to change.
Has to. And transitioning into those two last questions that I mentioned that are not maybe tech focused, they're more of a business plus personal question even, but I'm pretty sure that you're gonna respond with still a small insurance flavor, because we always ask this to our guests. Their decision-making framework. What helps you take tough decisions? Any tips that you can share with other leaders how to improve decision-making? So it can be as specific as you like and can be as broad as you like. Just make sure that it's yours and it's yours only.
So what I can just say, we want to make quite a decentralized decision-making process. So we don't have one guy. Like I'm not deciding by my own. Also Thomas is not deciding by my own. Like decisions are normally taken within the team. And also I think there's a little bit, I would say a buzzword, but how we do it in practice is also we are starting with so-called business decision records or architecture decision records. These are mainly like one-pager documents, like everybody can bring them in. So you a little bit describe what is the context. Then you give some options, for instance, what's doing a little bit this kind of background work, comparison analysis, and then bringing up a proposed decision. And what we're doing with this, first of all, it helps like that you really write it down, and everybody is able to do it in our team. And we bring this into our process, and then we have a kind of a review. You can think of like when academy or like this kind of peer reviews that we're doing, and normally we put them in different people. You can invite people for a comment and so on. And after this review process, normally like the whole thing can change again, maybe new options coming in, or the decision is even another one. And after this, basically, it's a kind of a joint decision on whoever basically owns this topic. So it's a kind of quite a decentralized process in that sense that, like we want that anybody in the company can take decision on any level, but we want to make the decisions that have been taken obvious, meaning really transparent, so that also afterwards you just have then this kind of a log, like you have a new joiner coming in and they can really see, okay, why do you go to Southeast Asia? or why do you look into the cloud topic, and so on. So they just go back, and you find the full history, not only about this one pager, but you can get through the full discussions, saying, okay, there might be a slightly mismatch on this and that, and this is, I think, quite a strong framework. And the only challenge is you need to really be more disciplined about putting down these kind of decisions to a pager, bringing the people for discussions, and not taking these decisions more in the side, saying during a meeting, maybe just a one-on-one, and then two people just decide on one thing. At least it should become transparent, and what we are using here is like a kind of a DevOps tool where everybody can see all these decision logs now, basically that they're open, that are closed, what is the current state, and so on. And this is also quite powerful because you can also scale that. It's not only about, I think we now started this with our 7-8 people, but just think about that. This same process can work for a large company as well. If you just have it already established in your team moods. So it's need to become a kind of a company culture, I would say, that everybody's also open to be a little bit challenged. Even like myself, if you just put out a decision log on this, it's not feasible, whatever, then you need to be open to that you just get really feedback from anybody.
Yeah, I mean, the process possibly could be implemented in a large organization, but the trust that's needed for that, and not having your guard up all the time, that's the difficult part. I think there's this hedge fund, Renaissance Technologies, Rentech, and as far as I know, unless I'm confusing some other fund, they have this transparency policy where every communication in the company is open. Like, you can identify your investment strategy with the ability to go through somebody else's emails, how they spoke to another client. So this kind of transparency, it's something that just needs to be there from the beginning, because if before we couldn't see anybody's emails, every calendar wasn't private, everything wasn't busy, people might just feel a little bit too underdressed or just naked.
I mean, that's the advantage if you start a new company, or you can really establish this at the very beginning. So meaning once you grow, basically it just becomes part of your DNA. That you can really then, everybody's engaging in this kind of open and transparent communication. And I think this was also one of the values that we also, when we started, we said we want to have it, at least from the core team, that this is, and especially when you think about being remote, you need to do it somehow with this kind of documentation-based approach with decision logs and so on, so that everybody can see what is going on. Otherwise, it's like anybody's lost out easily. I think it's also a little bit have this kind of approach also, I think the impact is also a little bit because we are now working remotely. So we have to do that somehow. Much more written communication, this decision log. So also already a bit more formal, I would say. Even at our early stage.
I think Amazon is famous for its 1-pagers or 6-pagers, and the concept that writing things out shows you how messy your thought process and your brain is. So it is a skill, both in async communication with small messages on Slack, as well as just making sure that someone reads this and gets it as if they spoke to you.
Yeah, right. I mean, this is the right thing what you now mentioned, like the async synchronization. This helps here. You just write this log, and then it lies there, and then anybody when it pops up, they can review it whenever they want. Or it's not that you now need to call in a meeting and say everybody needs not to be in the part of a one decision meeting. You can have this process open whatever for 1-2 weeks, and afterwards you just close it, and then you say, okay, this is not it, and you can really then do the decisions. Or that's also the thing. It's not all. Sometimes you also have the issue that you never decide, or it's just then always going back and forth. And here, with this one, you can really then put the time on it, or say after this, you can discuss until then, and then basically whatever is in, then that's basically decided.
And on to the last question, which is a magic wand question. I am handing over to you a virtual remote magic wand, and you get to wave it, and you get to say abracadabra. And after abracadabra, every 12-year-old in the world gets taught what? What kind of education does your magic wand give to every 12-year-old? Is it programming? Is it design thinking? Is it empathy? We've heard many answers. There's no right or wrong answer. It's more about what you say and how you justify it. What do you think would bring the best the world?
For me, it's also one is a little bit more on the soft side. I would say it's really about try to come up with your own things, and also if somebody don't like it, or it's like if you fall, basically that also learning to stay up again, or and then really retry it, and also really come up with your own things, or and then also if you're really a believer of you're just getting this kind of a trust in your skills, in your topics, in your ideas, and then also be able, just to live that. So really, this kind of more on the soft side, I would say, so nothing special. I think it's just a kind of a mood thing. Yeah.
I'm just curious because I know that we spoke about magic, but how do you teach that? Because how do we provide an education on that, right? That's a difficult skill to educate on. It has to be somehow developed internally through experiences. So that you're taking magic to the next level. If we were expecting,
I think there you need to already have magic. I think definitely it comes with experience, but I think it also helps with the environment, or it's just also if you have the right environment or early on, basically, I think this can just help. But I think it's a hard one.
I agree. After having done 40 plus of those interviews, I still don't know what my answer would be. So still waiting for my idea. Anyway, René, thank you so much for today. It was a blast. I'm wondering if you have any closing remarks, or if you're hiring and you want to make sure that any developer who might be listening to this should be reaching out to you. Anything that you want, just to wrap it up.
Yeah, thank you, Philip, for being your guest on your show. So really enjoyed the conversation. So it was really nice talking. So it was really great. And for me, it's two things. One is definitely, hopefully we'll still continue to grow. So we are then also by end of the year starting raising an investment round. So definitely investor topics are becoming more interesting. So by end of August, we will definitely have more information on that. And with this one, more or less growing the team. So once we have the one secured, so my job is to really to bring in the right people who really wants to work in such an environment, maybe not coming from the insurance, but really wants to be part of the Riskwolf story. Then just talk to me.
I mean, just like you said at the beginning, before this, there was not much of Insurtech or such things in your life, right? So you don't
exactly
to deliver on this. So René, thank you so much. I'll be looking out for the news in August, and I can't wait to see a TechCrunch article about Riskwolf Series A, Series B, Series C, IPO. All right. So all the best to you and Riskwolf.
Thank you.
Thanks a lot. And just wrapping up, we will be seeing each other next week, as every Tuesday, another episode of Disruption Talks, this time with Speed Invest. But still, today, you will be able to hear us on Twitter. We are doing our Twitter spaces concerning retail. Come over and hear me hosting a session with 3 panelists, experts from retail, from various countries, various approaches, and hear about whether brick and mortar stores are going to stay with us, or are they just going to disappear from the face of the earth? Thank you so much for attending, and see you next Tuesday.